Hi there, welcome to Kneppy Invest and welcome to Answers and Replies. In this video, I'm going to answer and reply to some of your comments, not directly in the comment section of my videos, but I'm going to look at them directly and see if I can answer some of your questions. And we'll start with my very first answer reply time video, which was released on March the 25th. I thought it was released last Saturday, but looks like it was released on a Monday. So let's start there and look at the comments section in this particular video. Should I zoom in? I reckon I should zoom in a little bit. And we'll start at the very first question. Great idea. Well, that's not a question, is it? So let's skip the question from Anderson. In fact, we'll like all these. Give them a thumbs up. And the first question from Daniel Dennehy. What if you're related to Brian? How about your thoughts on Pacific Edge PEB? I'm currently holding a rather large portion in my portfolio. And love your videos, mate. Thank you. Okay. I don't know a lot about this company apart from the very fact that they did have some problems quite a few months ago. I remember the share price fell a lot in one day. And I'm pretty sure this company manufactures medical devices. Pacific Edge PEB. I could be completely wrong in that. Let's have a look at TradingView. Engages in discovery and commercialization of diagnostic and prognostic technology for the early detection and monitoring of cancer. So sort of on the right direction there. And I'm pretty sure it had to do with them getting reimbursed in the American medical system. I can't remember. In fact, here's the day where the share price fell a lot. It was on the 7th of June. So I thought it was a few months ago. In fact, it was almost 1 year ago. Well, 9 months ago. Well, actually, almost 10 months ago. It just shows you how time flies when you're having fun. So that share price on that day fell 73.68%. And then can't remember what happened on the 6th of July, 1 month later, must have been news that was counter to the initial news, because the share price on this day rallied 95.4%. But no news since then. And the reason I say no news, without even looking at anything, is the share price has been just drifting lower. So the share price, before they released that bad news in June, was around about, just below 40 cents. Went all the way down to a low of about 7.6 cents. And right now is, in fact, what I'm going to do is I'll just lift that up. There it is 7.5 cents. The market cap of this company is $63 million. I'm just looking at the revenue for this company, and this is half year. So let's have a look at the annual revenue. Has been increasing over the past 4 years, but on a low base, $4 million up to $18.4 million. A loss making $25 million. Just by looking at the chart, nothing too exciting here at all. So what I'd be waiting for in regards to this company is some sort of positive news. Now, would I be holding this company at this point in time? I'm not sure, because nothing much going on with the company now. I'd be paying a lot of attention to how the company reports. Does this company release Appendix 4C? I can't remember. I don't remember looking at this company's Appendix 4C. It does look like it's quite illiquid. You can see there's one buy at 7.6 cents and the first seller is 11 cents. So if you wanted to sell this company, you could sell at 7.6. But if you wanted to buy this company right away, you'd have to pay up a bit. So that's a nice little premium. Anyway, let's have a look at the announcements. So it looks like one of the directors is retiring. Quarterly update. But just because it says quarterly update doesn't mean it's an Appendix 4C. Let's open up this quarterly update and have a look-see. And yeah, nothing. No Appendix 4C. They might give a bit of volume. There it is, test volumes, clinical adoption, sales force efficiency, but no financial numbers. So anyway, I haven't had a very close look at Pacific Edge, and the only reason I actually know a little bit about this company, and that's not a lot, is because of what happened in June last year and share price decreasing a fair bit. So at this point in time, not really on my radar, because chart really not doing anything for me right now. Intrepid Value, MRM buyout, shame, yes. And Kasana says, thank you for including company ticker in description. Cheers. You're welcome. So not much going on in that. Let's have a look at the ASX Daily Rundown of videos, 25th of March. 7 comments in this one. So let's start at the bottom. Crazy offer for MMA. Okay, so quite a few of these announcements might be in regards to that. Was just waiting for a pullback to buy in. Electro Optics kicked me in the nuts today. Retail investors getting screwed from Jack's Facts. Thank you. Thank you, Amazing World Video, for your comment. Timmy Grant. I should like these now. There we go. Like. Timmy Grant. Oh, here's a question I can definitely answer because this is 100% certainty because it's about my position or one of my positions. Kneppy, I'm curious. This is from Timmy Grant. I'm curious as to what you're planning on doing with your Rectifier position. I held on today. This is the cheapest it's been since 2017, but I'm being a bit fed up with this company. True. Yes, I am a little bit fed up with the company. I'm not sure how to read what's happened. I can understand why. Initially, I didn't understand why the directors resigned all at once, but now I do. It seems like they really wanted to do a capital raising, and that lead guy, the biggest shareholder, said, no, we don't need a capital raising. And then he's put in place what seems like he's put in place his son into the CEO role, then he's resigned, something like that. Anyway, I don't follow what's happening with RFT anymore, even though I am a shareholder. And to be honest with you, my position in Rectifier is small. It started out fairly small. And what I was planning to do with Rectifier is have an initial position and build up my position if the company keeps hitting goals. And they didn't hit a goal after I bought. In fact, they hit a home goal. And now that position is quite small. So I don't really have any intentions of selling right now. Sort of one of those scenarios where the position size is really small. And when I say small, I'd say really small. I could buy a dinner with it. Well, a very luxurious dinner at probably the best restaurant in the world. But there's no point me selling out right now. That's the reasoning. And yeah, it's been the cheapest for a while. And this hopefully is just short-term issues. They also had some problems with their half-year financial data because of what happened with their biggest customer or something like that. Anyway, so no, at this point in time, not planning on selling out my position simply because it's a small position. So yeah. Okay. Another comment about MMA Offshore. Yes, and what are we left with? MCE, Composite, Matrix, Composite, Electrical, or Engineering? Engineering. I'd say it's engineering. I haven't had a close look at this company, but I have heard a few people talk about it. So this company, I think, would be profitable. Let's have a look at their investor presentation half year. Haven't released anything since February of substance, it looks like. Now, I believe this company would be profitable. Revenue growth, nice revenue growth. In fact, increasing from $17 million in financial year 21 to expected revenue of $85 million in financial year 24. Revenue contribution, subsea buoyancy, corrosion technologies, advanced materials. I'm still trying to remember why this company got onto my radar. I did hear someone talking about it, but I can't remember why or what impressed me about, maybe not impressed me, but brought this company onto my radar. That revenue growth is really intriguing. Operating cash flow positive by $9 million for the half year. Now, it doesn't mean they're free cash flow positive. But the thing is, the first thing I always look at is revenue growth. Is the company growing? So that does get a tick right there. Equity down a little bit, 23.5 million, net cash of 14 million, net working capital of 6 million. So significant decrease in net working capital from 15 million to 6 million. That's not necessarily a bad thing. Increase in inventory from 5.9 million to 10.4 million. They could be ramping that up because they expect better, more business in the future. Cash flow from operations is what I wanted. Oh yeah, so cash flow from operations, $9 million, capital expenditure 3.1. So they are free cash flow positive by $6 million. So let's have a look at the chart right now. Closing cash of 23.3 million. So a little bit of debt there, but cash flow positive. Now I have a feeling the chart looks okay, but not the greatest. I'd say it's probably, I'm being a little bit unfair. I think it actually looks pretty good right now. funny enough, if the share price didn't rally back at the start of 2023, if the share price just went on, nice little a gentle ride up, sort of like if you can follow my mouse here, like up there, I'd be much more bullish on this chart. So there is a little bit of resistance at these levels at 35 cents. But if the share price can get about 40 cents, probably blue sky above, let's just zoom out, look at the weekly chart. And yeah, so if it does get up, I'm not going to talk about the history. Share price, according to TradingView, was as high as $9.50 in 2011. I'm not sure about that. Maybe a share consolidation, that sort of thing. So definitely, if the share price gets above 40 cents, we are talking about a multi-year high. In fact, probably about a 5-year high. So there is a bit of shift in sentiment just by looking at the weekly chart. So you do get a different perspective, and it does look like a trend change, weekly chart, and also a shift in sentiment as well. And the other thing to notice is really good volume came in start of 2023. And even though the volume hasn't been as big, we definitely have seen an increase in volume over the past year, which tells me that there are people becoming interested in this company. Market cap of $77 million. Doesn't seem too stretched for a company that is starting to grow their revenue. And their revenue growth, well, the revenue was dropping before this period of revenue growth. So probably should also mention that right now. So what I should do is do a bit of research on this company. So you're giving me two companies just to do a bit of research. Pacific Edge. Maybe one of the things I should do before I do this video is actually have a better look at some of these companies. But I want to go into doing this video blindly for some reason. I don't know why. So that is, where are we? So that is MCE. John's channel, can you do a chart on LOT, which is Lotus, I believe. I'm pretty sure this is uranium. I could be mistaken. Lotus Resources. I was going to say Lotus Mining, but weekly chart looks pretty good. Again, if the share price didn't pop up, the start of 2022, share price went to 45 cents. If it didn't do that, I'd be much more bullish on this, but still the share price is at a 2-year high, and this is the weekly chart, so should ignore that. But if you look at the daily chart looks absolutely brilliant. This is a nice looking chart, nice little dip over the past few trading days. We saw a really good dip back in February. Share price went from 38 cents to 30 cents. We saw another dip back in September. So shares in this company do go through dips, and it's right on the short-term moving average channel, which has been acting as a support level. That's all I know about Lotus. I don't know anything about what they're doing. Market cap 732 million. Chart looks pretty good. Nice little dip. So at this point in time, the chart looks brilliant. I don't know if you are a shareholder of this company. No reason, in my opinion, to be thinking about selling right now, just based off the chart. So it looks pretty good. Okay. Next comment. Frustrating, really. I was hoping to see the momentum for this business continue. So this is without doubt about Mermaid Marine, or whatever it's called now. MMA Offshore, sorry. And now what do you do? Is there another bidder? Possibly not. And even if there is, management have already endorsed this bid. So where to from here? Sell now? I'm thinking so. That's exactly my thoughts. Should I sell now? Just take my profits and find another position? Just forget about MMA Offshore. But why is the share price above the takeover bid? Why? That's the big thing I have. If the share price was like $2.57, 2.56 cents, I probably would sell. But for some reason, that just makes me think either there's another bidder or there's going to be a lot of resistance in regards to this particular takeover bid for Mermaid Marine or MMA Offshore. So I always want to call it Mermaid Marine. That's because of the ticker code, MRM. So yeah, I'm not exactly sure what to do. So I'm just going to wait a little bit, just wait a little bit of time for that. Okay, let's have a look at the 26th of March. So another 7 comments in this one. 45 likes for this particular video. Okay, let's start at the bottom. Timestamps. Good video. Thanks, Michael. Yes, I thought timestamps was going to be a little bit more annoying, but actually for these videos, these rundown videos, timestamps actually doesn't take much time for me. It's the other videos, the technical update videos, where I might do like 20 companies. That's actually really annoying. And I'll still do timestamps for those videos, but definitely for ASX rundown videos, I'll do timestamps. Maybe not for this video, but definitely for ASX rundown videos. Great information. Thank you. Again, I should like all these. Are you still holding MME ASX concerned about their funding? Thanks, Sarge. Yes, I still own a little bit of MoneyMe. I actually did take profits. And when I say profits, I mean a small amount of profits. The share price wasn't doing what I hoped it was doing, but I did think there is potential that companies in this space are really undervalued. Now, that does not mean I am not concerned. And there's a reason why the evaluations of these companies are at low levels. And there is a reason why they are looking really cheap. And that is around, will these companies survive? And if MoneyMe survives, I think it's looking really cheap. And that's why I've got a small position. I'm not sure if I will trade this company in the future. Maybe I will. And I'll just show you the chart. One of the points of me doing these videos is have a look at the charts on the fly. So this is the daily chart, and if you go back further in time, the share price of this company, a huge downtrend. Share price was as high as $2.50, it seems like, back in 2021. Now the share price is 7.7 cents. Well-defined downtrend, so no reason to be even thinking about entering this company during this downtrend. In fact, probably should have been getting out back in March 2022. In fact, if I was a holder of this company back in 2022, I would have had a sell position right here. There it is. As soon as the share price went below that line, which would have been around here, quite a few days to get out, I would have sold out at about $1.70. So that was sort of confirmation that the share price had moved into a downtrend and negative was turning. And it was actually fairly soon after the downtrend started. Not near the high though. But even before that, the share price wasn't really in an uptrend. So really, to be honest with you, no reason to, unless you're really bullish about the future of the company, no reason to be holding this company. Now, things have started to turn, I think. Things have started to turn. So I took two positions at 8 cents and 7 cents, and I sold out at 7.8 cents. So a slight profit if you take my two positions, but I'm still holding a small chunk of shares. Now, one of the reasons I was a little bit bullish was we started to see sentiment turn. Share price rallied all the way to 10 cents, in fact, 10.5 cents. A lot of selling. And if you can see, have a look at the candlestick charts for this company between the 8th and the 15th of January. And you can see on 4 days, the share price went to 10.5 cents and we saw selling. So you can see just the shadow, the upper shadow in those candlesticks, which means as soon as the share price gets above 10 cents, selling. So there's a natural resistance level for this company at 10 cents. And to be honest with you, there's a natural resistance for all companies at 10 cents. Share price fell to about 8.5 cents. And you can see the share price trying to go sideways at that level. And then all of a sudden, on the 28th of February, when the company released their results, the share price took a plunge all the way to 7 cents when I took a position. Share price actually did fall below that level again a few weeks ago, 18th of March and the 6th and 15th of March. Fell to 6.8, and I was thinking, oh, I might have to take a loss for this. And then the share price rallied all the way back up to, looks like almost 9 cents on the 22nd of March, and then the share price has folded again. I think there's going to be a bit of volatility in this company. Still a lot of resistance, a lot of shareholders bought at higher prices. I think the most important thing about MoneyMe, and the other thing I should mention, volume. I would like to see some better volume coming in. And probably the most important thing about MoneyMe is their financials. We would like to see this company really release a really top-notch financial statement or financial announcement or something, and that could get the market interested, and that's when we might see the share price rally. So at this point in time, just based off the chart, I'm not that interested in trading it, but I'm just owning a small portion because I do think companies in this sector are cheap, and a few companies will end up making it. I just don't know which ones. In fact, all of them might make it, which means all of them are cheap right now. Maybe it's all overblown. Okay, so MoneyMe. Vulcan is looking the goods. Let's have a look at Vulcan. I did see the share price of this company break out, but I haven't looked at it again. So there was a bit of chatter on this company. Yeah, there's the breakout. So it happened around about the 13th of March. It broke out, went from, and the breakout was around about 290 cents. The share price went from 290 at the breakout to 360. Nice return over about a 3-day period. Some good volume coming in. Volume has started to decrease. Share price has dipped. Now has dipped below $2.90 slightly at 287. So You could say and argue right now it's at a support level around about 287, 290. It's at a support level, got as low as 280. And this could be just a bit of a retracement in the share price, and maybe the next leg up will be soon. And you want to see the share price get above 360, which is still a fair way off. So this company, there was a bit of excitement in this company, as I mentioned. I wouldn't necessarily say this is a shift, absolute shift in sentiment. Wouldn't necessarily say this is a change in the trend, but I think probably the bottom has been reached, and that bottom was $2. And it did look like the company was trying to form a base at about $2. You can sort of see it. You sort of see the share price was struggling to get below $2. And then the share price started to rally late February on good volume. So looking okay for Vulcan Energy at this point in time, and market cap of 493 million. What does it happen to do? I was going to say it's a lithium company. I don't know if it's a lithium exploring company, but something to do with lithium. A lithium producer with net zero greenhouse gas emissions. That's right. That was their differentiator, net zero emissions. And I think one of the reasons why there was a little bit of interest in Vulcan is just because there was that short-term rally in lithium prices. And I do think even lithium prices are almost at a bottom, if not already at a bottom. Okay, you brought Mesoblast onto my radar. I was still working through the fundamentals, was not fully convinced yet, but I was curious. I took a small position to track it and learn more. Happy for the pop today. So that was 3 days ago. So that more than likely, you're probably up pretty good with Mesoblast because it's been crazy for Mesoblast. So that was 3 days ago. So maybe you bought around 50 cents or so, maybe below that. If so, chart does look good. I think this is definitely a potential breakout candidate. Now, I did hear someone getting really excited because Mesoblast is also traded in America, and on the Thursday trading session on the Nasdaq, Mesoblast was up 43.6%. So they thought it was going to be a really good day for Mesoblast on Tuesday. But you'll notice that Mesoblast American chart is almost a mirror copy of the Mesoblast Australian chart. So they follow us. We're not following them when it comes to Mesoblast. You can see almost exactly the same, almost exact same pattern the last 3 days in this company share price. So not necessarily a really good day for Mesoblast. However, if enough people think just because Mesoblast on the Nasdaq has gone up, that means you should be buying Mesoblast. If there's enough people doing that, maybe it can be one of those circular things. Mesoblast is up big on the ASX, and then he's up big on Nasdaq, and then the ASX people see it's up big on Nasdaq, so it's up big on ASX. Then the Nasdaq people see it's big up or up big on the ASX, so they rally and buy. Maybe one of those positive feedback loops. That's what they call it. Bridge up. Anyway, so good going, Anderson. You leave quite a few comments on my videos, so thank you, Anderson, very, very much. We are going to get to a comment in regards to trading, or Good Friday trading in America. I was wrong about that. So 27th of March, only 2 comments here. Can you please give your opinion on Close the Loop and TLC, the Learning Center, or TLC is the Lottery Core? Pretty sure there is a TV station in America called TLC. I could be wrong. I'm learning a lot from your content. Thank you, Panda Magic Hero. And then we'll have a look at thoughts on Sigma Healthcare. So let's do that right away. And I'll just look at charts. So I, at one point in time, was a shareholder of Close the Loop. And I did find this company fascinating, but the chart didn't fill me with a lot of promise, so I sold. It's one thing I'm going to do now. For smaller companies, small cap companies, I'm also going to use a bit of technical analysis, particularly to sell out of my position if I see weakness. One thing I haven't done in the past, I let that weakness see the share price continue to drop and drop and drop and drop. And I have seen the valuation of some of my holdings drop significantly. I'm looking at you, Pointera, when I should have sold based off a technical signal. I'm not going to do that for my high quality companies. So when I look at Close the Loop, and this is the daily chart, nothing at all exciting unless the share price gets down to about 27 cents. And the share price has got to that level once, twice, so sort of like possibly a double bottom. But why is there so much weakness in this company right now? Market cap 157 million. Nice growth in revenue. That's one thing I do look at. If you look at semi-annual growth, it looks even better. So revenue up to 136 million, profits of $12 million in the last half year, profits of $5 million after profits of $8 million. So maybe that's why the market's a little bit concerned, because the profit margins decreased in the last half year. I wouldn't necessarily say this company is expensive, P ratio of 10.3. I don't know, maybe this company is just not on the radar of institutions. But in saying that, look at the volume. So this is the volume, and we're starting to see the volume increase. Now, this company has done an acquisitions, and they more than likely have increased the shares on issue. So that can help it with volume. You can definitely see a massive spike up in volume when a company does a massive capital raising and does a massive increase in shares on issue, or dilutes shareholders. You sometimes see a massive increase in volume, but we see steady increase in volume and then explosion in volume from the end of February. And that's been happening the last month or so. Really high volume coming in for close alert. Now that could be a good thing moving forward for this company. So at this point in time, I do have close the loop. I do have this company on my radar, just where the share price is compared to where the low was towards the end of October last year. Maybe a possible double bottom, but other than that, chart looks pretty weak, pretty weak. And the other one was TLC. Just want to say tender loving care. The Lottery Corp, the Lottery Corp. Yeah, so this chart looks pretty, or better. It looks better. But there's definitely a resistance level right there. There's a resistance level for the Lottery Corp. So we saw the share price get to a high at around about $5.30 in March and August of last year. So naturally, that level is going to be a resistance level. And because the share price right now is $5.15, just below that level, what you might do is sometimes what I do, and this is probably some technical analysis people, experts would laugh at this. Sometimes I preempt the breakout by buying the share price below the breakout level. And I do that when I'm confident the share price will break out. I did that recently with my state. So I bought just below the breakout level. There it is. The breakout level was 360. I bought at 354, and lo and behold, on the last trading day, the share price possibly is breaking out at 366. So I have done this in the past where I have preempted the breakout level. But one thing you could do, this is just looking at technicals, is just wait for the share price to get above the level of $5.30. Other than that, the chart in the short term looks pretty good. Share price right now is at about a 6-month high, even about an 8-month high. Other than that, when you look at the financials of this company, this is a big company. Market cap 11.5 billion, P ratio of 37.22, which seems high, but that could be a reason behind that. And when I'm looking at the annual revenue, last 3 years, it's increased each and every year from 3 million, we'll say, or 3 billion to 3.5 billion, and revenue or profits fallen from 400 million to 264. I don't know what's going on there. This company was spun out of Tabcorp, so we don't have much of a history here. But share price is almost at all-time high. And if the share price can break above that level of 530, that would be an all-time high. Would I call this company a quality company? I'm not sure about that at this point in time. And would this company be affected by any change in government regulations, particularly when it comes to lotteries or betting? I'm not sure, because I'm pretty sure the government likes lotteries for some reason, gives them a bit of a financial windfall. I don't know. And last one is Sigma. Okay, so the market loves Sigma Healthcare, not because of Sigma Healthcare, but because of Chemist Warehouse. Chart looks pretty good. Chart looks really good. I'm not sure if I'd be buying Sigma Healthcare because of the takeover of Chemist Warehouse, because I did the numbers when they announced it, and it looked pretty expensive if it went through. I think what the market is saying now, that this particular takeover is going to go through. There won't be any issues. I think when the share price fell below $1, the market was much more concerned. But as time has passed, the market is becoming less and less concerned for some reason. I'm not really tracking this at this point in time, but when this does go through, this merger, not a merger of equals, this company will be Chemist Warehouse, not Sigma Healthcare, in my opinion. And to be honest with you, Chemist Warehouse, even though I think it would be expensive at these levels when this merger goes through, Chemist Warehouse might be considered a high quality company. I have to confirm that, and it might take a few years to absolutely confirm that it is a high quality company, but I think it has the makings of being a high quality company if it's not already there. All right, so thank you for your comment, Swimming 11 and Panda Magic Hero. Let's have a look at my final ASX rundown video. What if that comment about the market not being open? Well, I reckon it's in this one, yes. Okay. I'm pretty sure I read someone comment that the, oh, you know what it is because I responded to that. Yes, so there was a comment that the Nasdaq and the New York Stock Exchange are not open on Good Friday, which surprised me because when I lived in America, Good Friday was open. Everything was open on Good Friday. Talk about the governments, banks, everything was open. And I confirmed that. I Googled it. I went, yeah, everything is open apart from the stock market on Good Friday. I'm not sure why. So one thing I've learned that the stock market in America is closed on Friday, which annoys me because I worked last night and I would love to follow the trading in the American markets overnight. Just something to do. Shelley Dugmore, have you ever looked at LGI? Looks fairly good from IPO, but I'm not sure about their financial reports as it goes over my head a bit. At a glance, they look okay. I actually do own LGI. I'm a shareholder. I'm not trading this. I'm a shareholder just because of the thematics. They own, like, they do renewable, that's the best way to say this, green energy production. They, like, for instance, they put over where you dump rubbish. What do you call those? Dumps. Garbage refills or garbage fills. What do they call them? They put because when they get filled up, they put dirt or whatever over it, and it does create a fair bit of methane. And they've created a system or something to generate energy from that methane release from garbage dumps. So that's one of the things that LGI do. Yeah, the financials are difficult. I remember going through their financial statements going, oh, this is going to be difficult. If you look at the financial year 23 numbers, $16.3 million of revenue and income or profit of 6.4 million, which sounds amazing margins there. So I'm not sure if we can have a look at that. And the last 4 half years, revenue have decreased down to $4.8 million in the last half year and a net income of only $3 million. So a lot of issues I found just by looking at the annual report, but I just like the thematics around this company. That's it. Just what they're doing just intrigues me. And hopefully it's the future of not only our country, but the world, how we generate energy by using our waste, that sort of thing. And we are a very wasteful society. Don't get me started on that. Now, so let's have a look at the chart. That's the main thing. So I can't remember when I bought. I probably would have bought after the IPO. So I waited about 6 months. So they IPO'd in October, and I would have bought probably mid 2023. It wouldn't have been mid. It would have been somewhere in here. I can't remember exactly what. And I was down. My position in this company was down. You can see the share price languished a little bit for the longest time until we got to their half-year report around that time. And the share price has rallied from below $2 to a current share price of roughly $2.69. And the share price broke out recently. So there was a bit of a resistance level at $2.65. And the share price is now at all-time highs. A little bit nervous about how much the share price has run up on fairly low volume. Volume hasn't been that great. So that's probably one concern. But I'm not really looking to chart for this company because this is more of a long-term thematic trade for me. When I say long-term, I'm talking about 5, 10 years, possibly. Even possibly, this company will be taken out. We saw another company, energy company, taken out. GenX Energy, I think, was taken out. GNX, something like that. GenX Power, I think, I'm pretty sure it might have been GenX Power. Yep, GenX Power was taken over. You can just see by that chart. Rose 32.4% on the 4th of March. And the share price has been going sideways since then. Absolutely sideways. And that is the telltale sign of a takeover bid in the company. Just by looking at the chart, you can tell that. All right. How about an updated video on how much the market hates APM, new contracts and takeover offer, and now the market hates them. I have a feeling through photography, the share price for APM is going to absolutely tank when it starts trading again. I don't know if you have seen it, but they have released this announcement in regards to a takeover bid. So a trading halt. So you can't see anything in the trading halt. You have to open it up. This is one announcement I did see. And here is the crux of why they've gone into a trading halt. The company has received a receipt of letter from CVC, the company that is trying to take them over, advising that they are unable to proceed to finalize a transaction on terms consistent with their non-binding offer as disclosed to the ASX on the 28th of February and the ending of CVC's exclusivity period. Sure. Now, I saw that trading halt and I looked at the buys and bids and went, oh, gee, the share price is absolutely going to tank. The share price is $1.63. This first buyer is $1.51 and 0.5 cents. The first seller is at $1. Second seller is $1.23. Third seller is $1.26. Then we have $1.30, $1.35, $1.38, $1.39, $1.40, $1.45, $1.46, all below the first buyer, by the way. And you have to scroll down. So more than likely, when the ASX matches up all the buys and bids, if no one else puts any bids in, the share price is probably going to open up at around about or below $1.20. So more than likely, the share price will open at least 25% down. I wouldn't be surprised to see the share price of this company fall 50% when they start trading again, just because this takeover bid has been pulled. And when you look at the chart, we can see the share price rising because of the takeover bid. That's the only reason. So let's have a look at the daily chart. Share price fell all the way down to below 75 cents. First takeover bid was received on the 19th of February. Share price rallied 48%. And then I believe the takeover bid was improved on the 28th of February. Share price increased 13.5%. This is exactly the reason why I sell when there is a takeover bid for my company, when this sort of thing happens. Now, if I sold, I would have sold around about $1.30 or so. So I'm doing a little peeved off that there was an improved takeover bid, but then takeover bid looks like it's going to be pulled. And the share price, I wouldn't be surprised to see it fall below $1 again for APM. So unfortunately, hopefully you're not in APM right now. And that's another reason why I'm hesitant to trade some of these sort of stories as well, because sometimes the company can release something really negative. Hacho, cash out all my short-term positions that I'm up on, EOS and Zip, waiting for some good news out of the much-hated 3D point terror. Had some big losses in 23, but making a comeback. So here's why 10K stock, EM2. Market seems weird. I feel correction coming, then an upswing going quarter one, quarter two. I have no idea what's going to happen with the market. Good work with EOS and Zip. I am very close to selling out my position of EOS at about $1.66. I'm pretty sure the share price is. And Zip, I'm still trading that. But if the share price, I'll have a look. In fact, we'll have a look at both charts. So Electro-Optics, just because they have had this capital raising and the share price has fallen below the capital raising $1.70, it just makes me think the market hates this capital raising and positive sentiment in this company has completely shifted. Now, the company will be releasing Appendix 4C in the next month. And one of the reasons why I might be selling is because just to de-risk my position in this company. So I have a longer-term position, been holding that longer-term position for years. When I say years, I'm talking about years and years. I won't sell that position at all. It's a profit position. So when I initially held this company back between about 2016 and 2019, my position in this company almost became a 10-bagger. And when the share price got around about $10, I took most profits, but I held a small portion. When I say small portion, I'm talking about 600 shares, which at the time seemed a lot. It was $6,000, but I took a massive amount of profits out of that position. So I thought, yeah, $6,000 was pretty good. I've taken the big profits. I'll just ride that 600 shares forever. And then as the share price fell below $1, that 600 shares became worth $600. So a big change there. So I'm just going to hold that company or that allotment or that shares for who knows how long. So I'm going to keep holding that. But just to de-risk my position, trade position in this company before they release their Appendix 4C. Because if, after they did this negative capital raising, if the company releases a negative Appendix 4C, a quarter report, share price might absolutely tank. Now, if the company releases a really good Appendix 4C, the share price would absolutely take off. And if that happens, I'll just trade it. just trade it, go back in. Yeah, you can't hurt that way. You might lose a little bit on the first day of trading, but I don't mind. It's just de-risking your position in this currency. I'm thinking of doing the same thing with Megaport because Megaport, whenever they release an Appendix 4C, share price is up 20% or down 20% in one day. And Zip, close to selling Zip. So we had the negative day on the Thursday. Share price closed at $1.39. My sell point would be about $1.38. If I see share price fall on the Tuesday or the Wednesday, if the share price falls to say $1.35, more than likely I will sell my trading position right now. Now, I did sell earlier, went from 55 cents to $1.25. So let's compare to you. Oh, you beat me slightly. And then I bought back in $1.28 because I saw a little bit of strength. I thought there was going to be more weakness. So even if I sell $1.35, it's a small profit. I'm willing to take a small profit, particularly if the share price falls below a support level. And what was the last one? You actually mentioned something else. Oh, Point Terror. Okay, I'm still hopeful that Point Terror, one of these quarters, is going to absolutely surprise us and give it absolutely stunning Appendix 4C. And that's the time to really get interested. And I'm willing to trade Point Terror right now. Very willing to trade Point Terror when that happens. And that's a big thing, when that happens. I don't know anything about EM2. I can't even tell you what the company's name. Eagle Mountain Mining. If it's an exploring company, yeah, that's the reason why I don't know anything about it. So just by looking at the chart, I wouldn't be interested in this company just yet. So what do they mine? I'm going to say lithium. Gold. I'm going to say gold. Silver. Oh, well, if TradingView is right, silver, they talk about copper. Okay. If it's silver, okay, silver could be interesting. And let's have a look at the charts, the market. So gold. Oh, beautiful gold. I'm not a gold bug at all, but this chart is beautiful. This is a beautiful looking chart. Perfect breakout. Exactly what you're looking for. Those who say technical analysis doesn't work, it's balderdash, whatever, just don't know what they're talking about. They're closed-minded because this is a classic breakout. And you need confirmation of the breakout because it looked like gold had broken out a few times in the past, but it wasn't. It was a false breakout. You can see that. You can see that perfectly on the 4th of December last year. It looked like it broke out, and people were still chatting about gold breaking out a week after it falsely broke out. And then gold took a plunge. This, we didn't see any selling when it broke out, and that's the most important thing. Now, why silver? Silver and gold are related, but sometimes silver can be delayed, and silver companies can be significantly more undervalued than gold companies. You can see silver looks nothing like gold. So we're seeing a run up in gold right now. And I think there is an expectation, maybe not an expectation yet, because we're not seeing a run up in silver. I think there's a possibility that we will see silver go on a beautiful run. Now, the only silver play I absolutely know is Adriatic Metals. And this company's share price has been quite volatile the last year or so, trading in a range between $4 and $2.80. So I sure wish I bought it at $2.80. So this company has operations in Bosnia, Herzegovina, that area, and is something special about the mine. Is it like a really high quality silver mine? I forget. But anyway, so that's a possible silver play. So if you're on EM2 for silver, yeah, okay. Oh, you've just did a double up. Should I give a thumbs up to both of your comments? Let's do it. And Charlie Vane, GDX looks to be breaking out. Gold at 3,400, year of the miners. I don't know anything about GDX. Is this a gold explorer? I don't know a lot about gold explorers. In fact, I should say, oh, it's a gold ETF. Okay. I don't know a lot about gold explorers, and I don't really track many ETFs. And this ETF looks pretty good. Yeah, it looks pretty good. And it should look good because it should be tracking gold. I probably would prefer, this is just my own personal biases, I probably would prefer to trade individual gold companies, but that's just me. In fact, my I wouldn't say favorite, but one of the gold companies I own is West African, and the chart for West African looks absolutely stunning right now. And there's a few other gold companies on the ASX. Like I did a video on Bellevue. The chart for this company looks pretty good. Northern Star, not quite as good if I remember correctly, but I wouldn't be surprised if now Northern Star has broken out. Trying to get to highs, right on the highs, yeah. But then some other companies, I'm just guessing here. Let's have a look at Ramelius. I'm pretty sure there's other companies' charts who, no, Ramelius looks pretty good. Resolute, what about Resolute? I'm trying to just guess a chart that doesn't look quite as good. Yeah, so Resolute, not quite as good. Hopefully you can see why it's not quite as good just by looking at this compared to West African, Bellevue, even the last one I showed you, which was Ramelius. Okay, so thank you with GDX. That's ETF. Thank you for that. Learn something in all your questions and your comments. Sounds like you enjoy your job, but my question is, if you hate your job, do you think you'd be able to live off just trading stocks? You've never told us what the 3 training books were that you were reading, or did I miss that video? No, I have not done that video yet. I'm still reading. So what I was doing was I bought 3 training books at exactly the same time. And what I was doing initially was I was reading a little bit of one book, a little bit of another book, and a little bit of another book. And I went, that's pretty stupid. Let's just do one book at a time. So what I'll do is I might do a video, just show you the 3 books. And then I might to focus on one of the books first and then do another video on the other 2 books. So that's what I would do. Kneppy. Oh, a lot of people mispronounce my name, spell my name wrong. 2 P's, not 2 E's. Sorry. Still like your comment. I do like my job as part-time. I like my job. I like what I do. I don't like the management. Is that common? People think management are terrible. Hopefully you're not a manager, but throughout my life, I've had, in my jobs, the amount of bad managers I've had overwhelms good managers. The best manager I ever had was when I worked in a library in upstate New York, University Library at SUNY Brockport. By far the best manager I ever had. But I just find managers, most managers I've ever had just can't lead. And I think it is a concern. I think managing is a very difficult thing to do. And when you do have a really good manager, and this is true for CEOs as well, that would be really good for the company and the organization. Our managers are just on the next level down, or much lower down. They do a lot of bad things, and all you have to do is look at the culture right now. A lot of negativity among staff because of management, but most of the staff like the job, but a lot of the staff are leaving the job, moving to different roles within the bureau because of the management within my section, and that is a problem. And it's going to continue to be a problem unless they address some of the issues. But this is not a rant about the managers. I do like my job. Part-time is much better, and I have been thinking, could I live off trading stocks? So far in 2023, I am nearly up $100,000. And I could definitely live off that. But here's a question. Not every year will be like this year. There's going to be some years I'd say I would not make much of trading stocks. I still think I would make a little bit, but maybe not enough to live off. Now, technically, I have enough money. Now, I also have my super. I've got to remember, I have my super. And if I add up my super and my investments, I could definitely live off that, right? I could retire right now and live off that, but probably not to the level I probably want to. And I mean, I would want to do a little bit of traveling as well. I love hiking, that sort of thing, up mountains, that sort of thing. So my favorite places in the world are where you will see mountains like the Alps, the Rockies. My favorite place in the world is Colorado. And the reason it's Colorado is if you've ever been to Colorado, massive mountains, heaps of mountains above 14,000 feet. I'm in my zone. Love the Alps. I don't like cities. That's the other thing. I went to Paris and went, oh, I can't wait to get out of here. Even New York City. I go to New York City and go, oh, I don't like people. Or what I should say, I don't like big groups of people. And the other good thing about my job now is we are able to work from home more and more often. And the good thing about working from home is I'm way more efficient working from home because I'm in control of distractions. It's highly distracting being at work with 10 other people and everyone's talking, different groups and all this. It's actually really distracting. And it looks like we've just signed an enterprise agreement, and it looks like we'll be able to work at home a little bit more, which is good. It's good. I think working from home, if you're able to do it, it's a really good thing. Particularly, in my case, way more productive working from home. Anyway, so thank you for your questions, Mr. Fantastic. Happy Easter, Kneppy. Thank you. Same to you. Look at this. Same to you. So when whatever this YouTube studio gives me a recommendation sometimes, I just click on that. Analyst 555. Not much volume for Zip. Close to 40 million shares. 40 million of shares were traded across the day. So in terms of volume, what I typically do is I don't look at the amount of shares traded. I just compare to the volume to what you usually see for the company. So 40 million could mean a lot or not a lot for a company. So the best way to look at the volume is just have a look at this. So 40 million, if you compare 40 million to what's been happening in the last 4 months, it's actually high. Now, TradingView might be a little bit different than ComSec. I'm just going to confirm that because TradingView might not include Chi-X, whatever it's called. So volume in Zip is 39 million. Volume in TradingView is 30 million. So TradingView doesn't include Chi-X, while ComSec does. So still about 40 million. But even at 30 million, it's slightly higher than average. But then compared to the volume in Zip we saw before December, in fact, most days, the volume was below 10 million. So 30 million is high compared to what we'll see before November. Compared to what we've seen in the last 4 years, I'd say it's just above average. Now, I'd say on a down day, what you want to see is not higher than usual volume. You want to see low volume unless the share price is moving towards a bottom, and then you want to see volume increasing. That's a good sign. But on a day like we had on Thursday, you don't want to see a lot of volume. You want to see low volume. And that tells us that there's not a lot of selling of shares, not a lot of supply of shares on the market, and there wasn't just the demand. That's okay. So typically what I look for when I see the share price pull back in a chart like this, I want to see lower volume. Sort of like we saw back in the middle of February, share price pull back and didn't do anything. And we saw really low volume for about a week. And that was when the shares price just went sideways. That's a good sign. Share price at that point in time was about 85 cents. Anyway, yeah, thank you, analysts. Oh, this video is going on longer than I expected. And now let's have a look at Bellevue Gold and your comments for that. Okay, thanks, Kneppy. Thank you, Simon PT. Talent in the management is stacked. Don't be surprised if we see a takeover soon as gold price approaches 2,500 US. New mine open or something. Makes me wonder what MKR are doing wrong. Anthony now lawn. And nice one, mate. Love the gold coverage. Uranium is great to tidy up. So Bellevue Gold, yes. So Simon PT is I think absolutely correct. The talent and the management. So I had not done any research on this company. One of the things I do look at is the management when I first start researching the company. So I look at the financials, and then I look at the management. I'm going to say government. With the management of this company, went Northern Star Resources, Northern Star Resources, Northern Star Resources. And to be fair with you, if I can't remember the history of these particular fellows with Northern Star Resources, but if you see a management who had been in a high success story like Northern Star all the way back from when Northern Star was like 1 cent, and they were in the management team during that run up in the share price when they made those awesome acquisitions. I'm pretty sure Northern Star made an awesome acquisition. Those are sort of the companies that will pique my interest. And Bellevue definitely has piqued my interest. So thank you, whoever brought this company up. And a few people have brought this company up. I put this company on my radar. Now, the problem is, this is one problem. It came on my radar, and then lo and behold, the share price has absolutely taken off it should have taken off. Share price has increased 50% from the lows in February, up to $2. Now, there's a little bit of pullback, but would I buy these prices right now? I don't know. Maybe. I think the share price might take off on Tuesday because gold has done really well. Maybe buy at $2. Yeah, anyway, so for not, or maybe just wait for their Appendix 5B. They should do another quarterly cash flow report. And I think this company will be gushing in cash and possibly preempt that particular quarterly report because I think it's going to be pretty good. Anyway, thank you, Simon. I have no idea MKR. I'm assuming MKR is gold exploring company. I'm assuming it's got a low market cap. It's got some revenue according to this. I'm not sure how accurate that is. Gauges in mining, exploration of gold. So if it is just a gold exploring company, you will see weakness, not weakness, but nothing much happening in that space. So all the money going to gold is to the producers right now. Now, if gold continues to rally, gold prices continue to rally, all that money will flow down to the explorers. So a few companies I'm interested in, for instance, Pack Gold. Nothing happening. Going down. Another one is Lotus Resources. I'm pretty sure this is still going down. It's still going down. So we're not seeing excitement in the gold exploring companies just yet. We might have to wait a little bit because it doesn't happen. The way it doesn't happen, what's happening now is what usually happens. We don't see all gold companies go on a tear at the same time. It sort of trickles down, sort of like trickle down economics, which doesn't work, by the way. This is trickle down buying. So it starts at the top. The best quality gold companies will see those valuations of those companies take off. And then eventually, if gold prices keep on increasing, it will trickle down to these gold explorers. And then that will be the time to get excited. Not sure when they'll be. So thank you. And let's have a look at the video released today. So I'm recording this video at 3 p.m. So if you haven't left your comment by now, I won't mention it. Happy Easter. Thank you. Happy Easter to you. I'm working tonight as well. I'm happy about it. Companies operators are quite experienced, Frontier, with the correction in share price and increase in revenue, hopefully promising times ahead for the shareholders. Thank you. Yes. Pakistan currency. Okay, here's why I love comments. So I am not across everything. And Jason Wiley has mentioned something here which I would not be across at all. Pakistan currency has halved in the last couple of years, causing a problem with revenue, which means if sales stay similar in home currency, they may still half in Australian dollars. America have had similar problems with NAF governance, but the increasing sales from resources may still make it worth taking a risk on. So yeah, if that's true with Pakistan currency, that could be a reason why, the revenue has dropped, but maybe we should be tracking a Pakistan currency. What is it a ruble? I have no idea. Maybe I could learn something else in today's video. So thank you, Jason Whiteley. I did not even think about the currency. Yeah, it makes perfect sense. Okay, that's all I got for this video. Went a little bit longer than I anticipated. I can ramble, I suppose. So if you do want me to answer any of your questions, just leave those in the comment section of this video or any video in the next week. Now, I am planning a new video series, and in fact, I can show you what this new video series is, because I am doing it, not now. So I'm going to do a video on Credit Clear, right, soonish, and then I'm going to do a video, 5 stocks to watch, March quarter results, and I might do 2 of these particular videos, March quarter results of companies I own. For instance, we have Drone Shield and Megaport, and then 5 stocks to watch, March quarter results, companies I don't own that I'm sort of interested in how they might perform. For example, Bellevue Gold. But if I do take a position in Bellevue Gold, then it might belong in this particular video. So that's what I am working on right now. I have no idea when I will release this video, but and this might be an ongoing series, 5 stocks to watch and a different theme. So maybe 5 stocks to watch uranium, or 5 stocks to watch with a market cap below $5 million. Who knows? lots of possibilities with this particular series. So this is something that's popped up this morning after I finished work. Don't know why. Sometimes my best ideas come at the most weird time. Anyway, that's all I've got for this video today. If you have any questions, again, just leave in this comment section of this video and I'll answer them in the next video. Have a good day. Have a good Easter. Happy Easter. Hope the Easter Bunny brings you plenty of chocolates. But if you're chocolate intolerant, I actually do work with someone who is cocoa intolerant or something stupid like that. Sorry for calling it stupid. They can't eat chocolate. Yeah, I sympathize. So hopefully the Easter Bunny brings you plenty of chocolate. Have a good day. Talk to you later. Bye.